Well, the perpetual challenge we have is capital, and I'm a proponent of regulation. I think especially the financial services industry needs to be heavily regulated, and there's strict requirements for capital to assets, and we are growing at a rate that we always need additional capital. We're growing faster than we can earn the capital. So I'm going to be pretty soon faced with yet another capital raise.
Right.
And then the other pressures are the pressures to sell, shareholder pressure to sell, and the market's starting to heat up again.
Right.
You guys aren't in Florida, probably don't follow the Florida M&A activity, but multiples are going back up. Everyone was saying, oh, you'll never see 4 times book again, and maybe not, but we're rapidly approaching 2 times book now, and who knows in the next 6 months or whatever. So
right.
I see those as the 2 biggest challenges.
Right. So it sounds like having investors that are in alignment with the regenerative journey for the bank will be critical. Identifying those investors, educating them, working with them over time, and working with the exit questions.
Right.
Investors that maybe want to get out within a few years. How do you balance all of that? And it sounds like you'd like to keep the bank independent for at least a very long time. Is that your hope?
It's the whole Maslow's hierarchy of needs thing. It's very fulfilling to me I feel like I'm at the pinnacle and doing good things. I also have the reality that I have an obligation to the investors. I have an obligation, not only fiduciary, but a moral obligation. The only real way for investors to make money in a community bank is the exit.
Right.
And I don't know if I told you or not, but I have dinner with my parents every Sunday. Our families get together, my sister. And my dad sits at the head of the table where he's always sat. And a few Sundays ago, he looked at me and he says, Kenny, you think I'm going to live long enough to get any value out of that bank stock? And so, it kind of really puts it in perspective.
Right.
It can't be a
right.
forever thing. Not this one.
Right.
What's my hat trick? What do I do next? I'm not sure.
Right. Right.
So,
does the bank currently pay dividends?
No.
Yeah.
It doesn't because of that capital.
Yeah.
We need to retain it and roll it back.
Right. Right. Exactly.
The dividend thing's a real challenge. If you start, you can't ever stop.
Yeah.
The investors expect it.
Right.
I don't know. It's a conundrum.
Yeah, yeah, exactly. Well, on this question of setting investor expectations, there's one really inspiring story I wanted to share. EcoTrust is a very innovative nonprofit in Portland, and I've worked with them extensively around ecological forestry funds. And the key question there is exactly what's the investor exit strategy? What's the timeline? And right now, there's been a huge switch in forest land ownership from big integrated companies like a Weyerhaeuser that used to own all of their own forest land as well as manage operations, cut the wood, own the sawmills, market it. Totally integrated. That's going away. For arcane tax reasons, largely, most of those companies don't want to hold the land anymore. It's more efficient to have almost like a REIT type structure, almost like a real estate investment trust for forest land. And those vehicles are called forest management funds. They're getting billions and billions of dollars in new investment. And their strategy has basically been, look, it's 10-year exit. We're going to basically harvest at just the right time. We'll try to time the market, basically cut everything that we own, sell it for top dollar, and then we'll flip the land, towards the end of the 10-year period. We'll just sell it for what we can. And we're going to deliver 10, 12% returns during that period. And that's literally what they're saying in the investment prospectus. It is just the opposite of a regenerative view. They're literally just saying, yeah, we're just going to try to time the market, just cut it when we can get top dollar, and we'll sell it for whatever we can. That's our model. So EcoTrust has a little bit different model, which is we want to maintain this land in perpetuity. It is an open-ended fund. There is no defined exit, and We're going to restore the land. We're going to transition it to FSC certified, really well managed. We'll have additional returns from managing carbon credits, ecosystem services, sales, that sort of thing. And they've been very successful with those funds. So they have about 300 million now in various forest land funds that are totally open-ended. However, because some investors need to get out, even though there's no defined point at which you can leave, the fund does allow the different investors to basically buy each other out in carefully circumscribed ways. So they turned that need for an exit into an incredible story because there's a tribe, the Coquille tribe in Oregon, that was able to acquire the funds to buy out some of the existing investors that, their time had come. They really wanted out.
Mm-hmm.
And so the tribe was able to purchase a 5,000 acre parcel of very significant land from a cultural perspective. It's really the heart of the Coquille tribe's traditional territory. Mm-hmm. So the tribe was able to acquire that land. EcoTrust used the proceeds to very strategically buy out just the key in that moment. And it became this amazing story of really holding that land so the tribe had enough time to build the funds to acquire it. And then they were able to take that money and buy out those key investors. So I think there's almost a regenerative model of how you think about investors too. And I know RSF Foundation has done very interesting things because they've also created loan funds like this with sometimes dozens of very small note holders. And each year they kind of have a process where they say, hey, who really needs out this year? Mm-hmm. And maybe a family, has $25,000 in notes for a Waldorf school. And the family says, we really would like to get out for whatever reason. And they talk to the other note holders, and someone steps forward and says, great, I'd like to take on more notes. So it becomes mm-hmm. a conversation, and part of that story that the investors are going through their own life cycles and their own regenerative journeys, and it's a conversation about kind of who most needs what year by year. Mm-hmm.
Mm-hmm. Well, a similar example would be the Sapphire Fund that the Global Alliance for Banking on Values put together that invests in values-based financial institutions, and it's a very similar structure. It's a mutual fund, and there's going to be periodic times where investors can get out, but it's really a more long view
right.
kind of thing.
Right.
Within the fund, they expect returns of X percentage from earnings from the investee companies, but they also expect that some of the banks are going to sell and they'll have the big
right.
pop or whatever.
Right.
That could potentially be a source of my next capital need.
Right.
It would be a larger chunk than any of my current shareholders, but at least it's values aligned.
Right.
I wouldn't have that problem, I don't think.
Right.